afternoon, everybody. How are you all doing today? So today's date is Sunday, July the 5th. It's about 3 p.m. Central Standard Time here in Winnipeg, Manitoba. And I just thought that I would run some of my thoughts through this video as more of a lesson type of video and combined with a technical analysis video as well. Kind of a newer format. I'm sorry that I'm not turning the camera on. It's extremely bright here right now. And I'm not really looking the best today. I'm kind of in rough shape after some really bad news, which you can check out on my Twitter. But anyways, let's get into this. So, right now, what I'm looking at is this RSI, okay? This is what I call a parabolic move upwards. What's a parabola? Well, basically a curve, you could say, okay? And the way that I define it is like this. And this is a great thing for rallies, but also something to be extremely cautious of. So we're going to go over parabolas and RSI and a lot of other factors. So you take one tip from the low to the other low, and you see this, okay? True? You see that line? And then you take another one, and you can go to the upside, like that, and you see another one, right? Now, if you kept extending this to the upside, where the curvature changes, let's say we got another one, okay, and it was also curved to the upside just like that, right? Well, that's a function that's parabolically going to the upside. And we call this function y is equal to e to the x. For all you math geeks out there, if we were to draw a curve, it would just go up to the upside like that, right? Make sense? So if I remove these lines, you see a curvature like that. That eventually reaches an asymptote, but it goes to the upside like that, right? That is a parabolic move to the upside, and that is a scary thing because what goes up that fast? Well, for all you math geeks out there, if I put a negative, y is equal to e to the x, well, that function now is represented like this, coming down equally as fast. Okay, and these are what I call the inverse, or like an opposite of a V correction. Okay, so the opposite of a V correction is like, let's say you're coming to the downside. Okay, check this out. So this is going to be kind of a cool lesson video for you guys if you're just kind of wanting to get inside of my head, because I think a lot. People say I think way too much. Let me give you guys a clear-cut example. This is my watch list right now. These are my hot coins that I'm watching. I will give you the best example, and it's going to be on this particular February 6th day, on 2018. Okay? Right here. I remember the date. Don't ask me how I remember it, guys. But man, do I have a good memory. Alright, I called it before I even brought it up. February the 6th, 2018 is the day. I remember everything, guys. December 17th is when the rally ended. Let's double check my memory here. Right? December 17th. There you go. That little candle right there. Right before the 18th. That's when it happened. These are very much so engraved in my head. Now, what I'm getting to is February the 6th. What we ended up getting, okay, was a V correction to the when we hit support. Now, hard to disagree with this. Came down parabolically, moved up parabolically. See, that's a V type of correction, right? Once again, moved down parabolically, moved up to parabolically. Well, if we move up parabolically, most likely we're going to move down parabolically as well. True? Can we find a case that's actually showing us something like this as well? Yeah, December 17th. It parabolically moved to the upside. It parabolically moved down. Okay? Now that I've established a fundamental, you can't just say things and make it up and not be able to prove it. Gotta use kind of a basis or a foundation or some fundamentals from another coin that's going to prove that, hey, might actually be onto something. Well, take a look at that on the weekly, right? Now, this is a great thing and people are going to FOMO into it. But my best advice that I can give to people right now, if you're thinking of going long, is you are freaking too late. If you didn't catch it to begin with, on this particular breakout right here, this little congestion, you missed it. It's too late now. You snooze, you lose. Timing is everything. That was an easy freaking catch. In my opinion, if I was watching it then, but I was busy moving. That was just, wow, was it easy to catch. I think it was like literally one of the easiest coins to catch on the breakout. It could not have been any more simple. Can you guys have seen it more simple? No. Now let me show you this, okay? It's always good to review what has happened in this particular case. Forget the mistakes, focus on the lessons. Remember that. Forget the mistakes and focus on the lessons. Okay? Sure, you made a mistake, but and I'm not talking about just losing money sometimes. I'm talking about the mistake of not getting in. Right? That's a mistake. At least it didn't cost you anything. And if it didn't cost you anything, it's still a mistake that you made and you came out with a very valuable lesson. Now check this out right here. Okay, I'm going to show you right here, down right there. See this little boop candle? This one right there with a huge volume? That frickin' poked out of it. And also, all four of these rather, the EMAs started to align. And then if you actually drew your supports and your resistances out there, what you're getting is a beautiful symmetric type of triangle that really did want to break up to the upside, and that's precisely what it did. That symmetric triangle made this little apex in this particular region, and we got a massive breakout to the upside. Okay, and this is on the 4-hour chart, by the way. Of course, there's a lot of signs on an earlier candle, but we're going to use the 4-hour as the main one to draw the symmetric triangle. But if we went to, for example, the 1-hour candle, we can see it earlier coming up. Let's get a cursor here. So take a look right there. Okay, see this candle? That is your leading, that's your indicating candle. That freaking volume right there. Okay, and actually this one here, see this little guy right there? We're actually all, this whole cluster region in there, it's all hovering above that 55 EMA, and the EMAs, the 8, the 13, the 21, the 55, they're getting very tight. And because they're getting extremely tight, you see this candle right here that wants to break outside of the resistance. Okay, it's trying to break through that ceiling and puncture it. And the volume is very indicative, because if you look at the volume compared to every other, okay, like you look at the volume here, just as an example, okay, you really see it huge for the past 12 hours, or 24 hours rather. So then you can assume that, hey, well, this candle right here is pretty decent volume, right? This one here broke out of it finally. That's a hesitation candle is what I call it, with a hesitation volume. But nevertheless, it broke out of it, and the next one yielded so much volume that if I saw a tiny push, right? I saw the bears trying to push down, but as soon as it got rejected right here from 9078 all the way, and they moved up a whole percentage, right? 9144, right? That's huge, guys. It moved up. Actually, how much of a move is that? I can't even do the math. It's not 1%. It's more than that, isn't it? I think it's me just check it. Actually, it was about a 1% rejection there. Okay, so 1% rejection. And then we ended up getting a huge rally to the upside. And that would have been my entry. So I'm trying to show you guys how I think and what I would use to correlate for a breakout as well. So this particular region, as soon as the bears got rejected, and then we started moving higher towards it, I would have entered there, and I would have put my stop loss right there at the support, which is now, or which was the previous resistance. And then you guys would have entered around 92-cent range, and that you would have rode it hard until the 55 EMA pretty much ends up getting touched, which is not even close to yet. So right now, I do have to admit, I'm in a short position for VET. My target is around 1250, and I'm in a short position. I was in a short position from over the 14s before. Well, the first short position I was in, right, was around where was it? It was yesterday when I was tweeting it. I honestly can't even remember. I feel like the day's been a jumble. I think I was in like from 12.7 or 12.9. I gotta go back a little bit. I don't remember when I've been tweeting this since, to be honest. Oh, right here. This particular time. Yeah, I was in 12.7-ish, and I ended up getting to like the super low like it dropped 8%. Right here is where I can't remember. I got into too many trades yesterday, 3 trades total. It dropped 8% about. There you go, 9%. So that's where I originally was in my short there. But then now I'm, of course, in another short already. And I'm going to be eyeing about the 12.5 ranges, I'm guessing. Maybe even lower than that. Right now, though, on the 2-hour time frame, what I'm seeing is this particular resistance, right? I'm trying to get it accurate there. See that? You guys see that? That red line I just drew? Tell me that's not a resistance right now. So if I were on the 30-minute chart, it doesn't look like a resistance, does it? If I go to a 45-minute chart, it definitely doesn't look like a resistance. 1-hour chart, nope, not close either. 2-hour chart seems to make a lot of sense, doesn't it? Where everything above this particular region is now a bear trapped region, above the 144 range, right? Yeah, definitely. So I've got a lot on my mind right now. You want to know what's on my mind? If I were to keep this resistance there at the 2-hour chart and I went down to say a 30-minute chart, or a chart that seems to make more sense, maybe even a 15-minute chart, okay? Just for more data. So if I now take this and I drew a triangle, is this now going to make an ascending type of triangle? Right? Is that making an ascending type of triangle? Let's see. Go back to 2-hour chart. Spread these guys right here. Now, if it doesn't break to the upside, okay, as soon as it gets to this particular price point right here, anytime it gets there, I will be shorting. I will be adding to my short. I have absolutely zero reason to not add to my short position if that is my bias. Okay? Because then I zoom all the way out on the 4-hour chart. Okay? I assume that this entire wave is one gigantic wave. Okay? Now, I'm not going to assume more than that. I'm not going to assume that this was 5 particular waves. That would be very, very not conservative. The opposite would be too aggressive. I play one subwave at a time. Therefore, I will assume that from this particular region right here, from where it began, that's where the wave originally began, which is basically this point right there. That point right there, okay? That's where I'm going to assume the wave began, or even this low point right there. But more still this particular breakout area. So now I go to lower area, time frame, and that's where I'm going to assume it began. So check this out, okay? So if I assume that is the breakout, what I will do is be in the middle. And you'll see what I mean in a second. I'll take my Fibonacci retracement range right there, okay? I'll say to myself, okay, well, we retrace all the way back to 382 ranges already. And I will assume being in the middle, right around the 0.5 Fibonacci retracement range. But more so realistically, check this out. This is kind of cool. So if that was my Fibonacci range from the breakout right there, what I'm going to do is I'm going to say to myself, this is freaking awesome right here. Why is it awesome? Because this particular low region right here happens to actually be directly at the 0618 region. Next territory of support. Interesting, right? And another cool thing, if I go to 30-minute chart, you see this long wick right here? You guys may not see it. Oops. Okay, see this one long wick right here? Look at where my cursor ends up meeting. Right there, this guy right there. This long wick, the one that dropped 20% to 28%. That one right there happened to hit directly at the 0.5 Fibonacci range. Kind of cool, right? So if that one hit the 0.5 Fibonacci range, I asked myself, is it possible if I keep stacking up my short positions right here, is it possible that when we get to the conclusion of this apex right there, are we going to break down? So I like to ask myself a series of rhetorical, well, not really rhetorical questions, but I question it with you know, I just have a lot of questions that I try to kind of answer and to see which way it leans more. So I'm asking myself now, well, kind of a series of questions, you could say. Well, if I can't even move, I can't even look at that arrow. I'm trying to remove it, but it's in the Fibonacci zone, so sometimes you can't even click on it, right? Pretty cool that I'm doing this on an Android. So this arrow right there, I gotta do from up here, then I gotta drag it. It's hard on an Android. So when I stack up my shorts right there, when we get to the conclusion of the apex, well, we're going to bounce and hit the 0.5 Fibonacci range right there. But is it also possible that we'll break through it? Because I kind of think that we will. And hit the 0618 Fibonacci range. And bam, that is how I've derived my target somewhere between 12 and 12.5, which seems to be fairly logical in my opinion. Okay? So now, aside from that particular range, now let's say I take my RR, which is pretty silly. Okay, if I take my RR from right around there, I'm just going to take the average of right here. Because obviously I'll be being a team player and also market executing a lot. So now let's go with my conservative one at 0.5 obviously first. Okay, 0.5. Whoa, I've been talking for 18 minutes? What the heck? That's incredible that I've been talking for like 19 minutes now, and I got a lot more to say, put it that way. So then I take it above here, right? I'm going to do a 2-to-1 RR roughly. Like roughly 2-to-1 RR. Aw, my friend Monica. She's so sweet. She's my friend that lives in Bulgaria, Greece. She goes to Italy a lot, and Spain, and have a lot of friends in the world. Yeah, if you guys don't know, one of my closest friends that I've had for a long time growing up, she went missing, and she was actually in the Winnipeg police report. And yeah, she was missing at 2 in the morning on July the 2nd, and I thought it was nothing, of course, right? Maybe she just went out, she partied, and people just don't know where she is. But then the next day, July the 3rd, it got really worrisome because nobody knew where she was. And then on July the 4th at noon, I've known this girl since I was 9 years old, okay? Well, I'm getting pretty teary. That's why I'm not going on video, because I'm kind of upset today. I've known this girl since I was 9 years old, so that's now 27 years. She's the first person that I met when I moved to Winnipeg here, or one of the first people I've met, and one of my closest friends of all time. And I grew up with her. She was my first kiss, my first crush. my first girl that I've ever danced with, like in grade 5, you know, like and then July 4th on the afternoon, just yesterday, she was found dead in a river. Yeah, so she was missing for about 40 hours. Actually, no, for 38 hours before she was found. And yeah, you can check out my Twitter. It's yeah, see some old photos of her and I. So that's why I'm a little bit upset. And anyways, that's what my friend Monica is talking about. I didn't want to say more than that. Anyways, back to the TA, I guess. What were we talking about again? Wow, I completely forgot what we were talking about. RR, risk to reward. All right, I'm just going to pretend that we never had that conversation, and I'm just going to dive right back into this. All right. So, now that I've got my RR set here at roughly, you know, something like this, I'll probably be more conservative. Probably end up taking less than a 2-to-1 RR. But man, I'm so aggressive that my stop loss will probably be even tighter. I want to get straight up on 2. In fact, I'm so aggressive that even if it got to that red line, the resistance at 144-ish, I'd probably end up stacking up more. Just because I would assume that, like, you know, there's going to not be a throw over to the downside. And those are all bear trapped or bull trapped regions up here. And if these are all bull trap regions up there, like right here, I mean, that particular region, then I'm just going to keep stacking because I really do think that it's just going to go, like, really, I think it's going to, anytime here, bull trap. And I think it's just going to go, it's going to plunge down. It's going to hit right here, right? Because this particular line is a 0.5 Fibonacci range. And right here is actually the 0.618 range. Okay. Yeah, so that these are my thoughts. I think that I'm going to be right. I'm right quite often, right, guys? I mean, if you take a look at my Twitter, holy crap, am I right often lately? I don't think I've been wrong in the past month and a half. Every prediction I've made has come true very accurately. So then now I got RR, guys. I'm not saying to take my trade. I'm saying that this is educational material. So that's 2-to-1 RR. Okay? 2-to-1 RR. Now, in the next video, if you guys, you know, frick, I'm just going to do it. I'm just going to show you guys it because I'm in the mood. I'm going to show you this, okay? So let's get some figures here and go through it together. So our entry price is roughly, we'll just double click it. Come on. Why is it not working, guys? I moved too much. Oops. I'll take the average around here. Actually, I can see it fine. So our entry price is 14200. And then 142, 147, 130. Yeah, I'll remember that. So our target, we're gonna pretend we're playing with okay, let's just go with the more non-douchebaggery number so people can actually all relate to it. Let's just say we're playing with 100,000 coins. And then our entry price is 143-ish, right? Am I right? I've got a bad memory today. I'm kind of all over the place. 142 and 147. So now our entry price is 142. You know what? I've been using this Excel spreadsheet for 3 years and I've not changed a single thing. It is quite the Excel spreadsheet. The up and the down factors and fees of 0.2% on the old Bitfinex, which I should probably delete. I should change this. So our target 1 is 0.013. Okay? That's our target 1. Okay? And then our target 2, if you were, there's 3 different cases which we're going to play with. 130, and the target 3 is, we'll just say 1 2 1 2 1, we'll say. Okay, 1 2 1. Target 2 is 1 2 1. You guys should probably watch this part in times 2, because I'm obviously, times 2 speed. That helps a lot because I'm doing it a little bit slow. 2 1. And then the stop loss is 147. This is becoming my risk. 0.14. If you guys are not doing this for every single trade, you're gonna be. I bet you are losing a lot of money. You should be doing this every single trade. Whoops. I'm not kidding. Like, if you guys think I'm joking, right? That I do this every single trade. And that's really, really important. 0.02 risk. 1 4 7. There we go. So my risk is about 4. It's pretty crazy, eh? That's actually insane when you think about it like that. And it's actually taking the risk. The risk is based off of oh, that's why it's the zeros. It's adding a space every time, okay? Because I'm using an Android. 1 3. There we go. It's a little bit better. So the risk right now is taking it off of the 618. See, I'm not putting in all these figures right because they're crazy decimals and stuff like that. But it's about right? Like it's about 4.2, the risk, because I'm not adding in all those specific decimals, etc. Right? So yeah. So if you were to take, we'll just go based off of this, okay? If you were to take it at the 0.5 Fibonacci range, my RR is about 1.75 from what you saw. That's the 0.5 Fibonacci, right? Let's just zoom out so you guys can see this a little bit better as well. Because this is how we ended up evaluating it to begin with. So we'll be consistent. Right around there. See? Right around here. Make sense? That's kind of how we're doing that, right? Oh, actually, I didn't do it from there. I did it from right there. There we go. That makes more sense. Okay, there we go. So now zooming in a little bit, you can kind of see how this is working out. Okay, so right here, that's the 0.5 fib line hitting that particular wick. And that's the 0.618 hitting that particular line. So that our RR is actually pretty killer right now. And if you were to take, for example, 50% profit, like look on tier 1, right? T1. T1 is like an 8% possible growth down this particular column right there. The maximum profit is 100, and we'll just round it up to 120 to make it easy. And an 8% growth. And then tier 2, right? That's a target 2. That's a $209 or $210 possible profit. We'll just round it up. It's just easier. That's a 15% growth versus like an 8.5 to 9% growth, right? And then the risk is about 4.2 for target 2. Target 1 is about 1.84 or 74 RR. Not bad. And the maximum loss is 50. So once again, you guys got to get it out of your heads that I'm not giving you financial advice. I'm not here to be your babysitter to tell you what to do or what not to do. If you ask me questions on Twitter like, what are my targets? I'm not going to answer you. Everything is exemplified in the videos and my tweets. I don't give specific numbers to people, nor am I your financial advisor. If you would like financial advice, I charge $300 American an hour. No joke. That's how much my time is worth to me. So I'm not trying to give you guys financial advice or what to do. I'm just trying to show you my process and how I personally think and what goes through my mind when I make a trade. And this is actually giving you guys just kind of the baby steps. And this is about a 30-minute video or something already, right? And or almost 30 minutes. And that's just trying to condense it for you folks. So imagine what really goes through my head and the analysis, the heavy analysis that I do when I want to actually enter a trade. So I'm pretty confident right now that we're going to be dropping. I don't think that that's going to be going to the upside. Just see too much potential right now for bears. I think that there are more day traders, in my opinion, than there are people who invest. I think that people don't care nearly as much about the project, nearly as much as people like me who don't care about the project and just care about the profits. Does that make sense? But that's my opinion, and we don't really know for sure. But that's firmly what I believe. And once again, there are more people like me who are day traders that only care about the profits. And they don't care about the fundamentals of a project. All I see are dollar figures, okay? I mean, if I were to go to a 1 hour chart, I mean, we could easily say as well that this is going to make some sort of symmetric type of triangle. And we're going to break out again to the upside, right? So there's lots of arguments about who can see what. It's not like it's an ascending triangle on all time frames. That would be too beautiful, in my personal opinion, right? If we all saw an ascending type of triangle on all the same time frames, then everybody would see the same thing, and then everyone would conclude the same thing, which is we're going to break to the upside. And that's a very powerful psychological factor because we're all seeing the same thing and it's synonymous. And there's a lot of confluent reasons why people would want to break it up to the upside and rally. But here, some people might see it on a 1 hour time frame like me and see it's a symmetric triangle and it could go either way. Or some people could see it on a 2 hour time frame and see it as an ascending type of triangle and it's going to break to the upside, right? So right now, I'm kind of on the fence right now, but a little bit. But I'm more so leaning towards the bearish side. Today, though, I think it's going to be kind of neutral. When you look at the 3 hour chart, we're seeing that these resistances are really heavy around the 144 range, right? It's also supporting above the 8 EMA, which is a dangerous thing because on a high time frame like that, well, on a high time frame like that, we could easily see it just drop to the next lower EMA. And this is basically just a price action analysis that I'm doing as well, right? I mean, if you take a look on the 4 hour time frame, and I said this as well on Twitter, if you saw it, that this right here, it opened up right there, okay? We look at this candle right here that we're looking at. I'm just going adjacent to it because I don't block the wicks. So we opened up right there, and then the bears ended up pushing it down, but the bulls defended and pushed it back up. That's how we get the wick on the downside. So we opened there and got back up to right where we were after bears made an attack to the downside. And then the bulls pushed it all the way up, all the way up, all the way up, all the way up to 1.7 ranges. And then the bears pushed it all the way back down to right here, the 144 ranges, 143 ranges, where we find resistance now. And then we opened up right here again on the next candle. This one right here is what we call a gravelstone doji type of candle. Think of it like a hammer with a smaller wick, but upside down. So we opened there, and then the bears, and we know for a fact that it went the way that I'm just about to describe it because of the next candle. We didn't know that ahead of time. Well, we would have known that in real time if we had followed it as well. But just looking back on it, we know because this candle right here is bearish. It actually started off bullish and then it ended up bearish. So it opened right there and the bulls ended up pushing it up first. The story is very important. Remember it. Okay, the story is really important. It's not the other way around where the bears pushed down first and then the bulls defended and then the bulls pushed up and then the bears pushed back down. It doesn't go like that because this candle right here ends up telling you. So right here, we ended up pushing to the upside first, and then the bears pushed it all the way down. They still had the momentum. The bulls never had the momentum, or the bears never had the momentum in the beginning. The bulls did first. So then the bulls ended up defending it. That's when we get this tiny little wick. And then we pushed it all the way back up past the opening, and the bulls tried again. And we know that this is the case because the next candle right here, this candle right there, is called a bear spinning top. Almost like a hanging man, but with a bigger body. And then the bulls ended up pushing it to the upside with a tiny, tiny little wick. And we all know what they say. Nobody likes small wicks because they all like big wicks and they cannot lie. All you sisters, I know you can't deny. So then, what ended up happening is that the bears pushed it all the way down. So this is where it opened, okay? Bears pushed it all the way down. Got a wick. Bulls pushed it back up. Right there. Okay? And that's how we got that big red candle. And this candle right there is another type of shooting star candle / gravel stone. And it's nasty. Combined with the volume down over here. Look how nasty that is, okay, guys? It's so ugly. At this candle, we're like getting not even a quarter of the previous candle. And this candle was about half of the previous candle before that. And this one is half of the previous candle. So it's kind of scary all across the board right now. I mean, we did get some RSI that's just really high right now. We're at 80 RSI. We reached as high as 91. So the 2-hour chart right now, we're just about to frickin' cross over. Are we going to drop to the downside? I mean, we got like, how much more time? Got another hour and 15 minutes to figure this out. So another hour and 15 minutes before we either get a huge jump up to the upside and a huge rally above 144, or we simply break out of this such a simple structure. But it's got to break out of here. It's got to break out of this support, in my opinion. Just give me a drop to the downside. Let's see what happens. Let's see if I'm right. You know what the cool thing about this is? Even if I'm wrong, I'll end up breaking even, or at most I'll lose 0.5%, and then I'll notice it right away, okay, if I'm wrong. Either this is the resistance, like I mentioned, based on the 1 hour time frame, or whatever. If that's a symmetric triangle, then we'll break to the upside, right? Break right up to the upside there in that apex that's forming, or this is the actual resistance right here at the 144 ranges because of the 2 hour time frame, right? Around there, 144, let's just say 145. Okay, so now either way, I say to myself, man, I'm gonna be right either way. That's awesome. So as soon as it gets well above the 145, 144 ranges, I'm gonna be taking my loss almost, right? If we get heavy conviction where there's a lot of volume going to the upside, I'm not even going to wait till it hits my stop loss. I'm not going to assume that it's a throw over where they're just trying to trap the bulls on the upside in that bull trap region. I'm just going to assume right away that I was wrong. And if I'm wrong, I'll lose, what, 0.5% maybe, if even? And then if that were to happen, then I'll just go with the trend. And of course, my first target is going to be 177 or 170 ranges. Who would not want to do that? Right? That makes sense. Oh, I don't know why my cursor's not working now. I gotta delete some of this stuff. I can't grab anything anymore. Anyways, let's see if I can show you a long position here. Yeah, if I'm right here, you know, I'll go way to the upside here. And okay, there we go. It works again now. And I'll go 177-ish. Or actually, I'll probably end up going with the wick. That's still a 10% gain there. 163. And this one here is 2% loss maybe. I'm not even going with the 3%. Allocate a higher R unit. Still got 3.56 RR. So either way, I think I'm in the winning candidacy right now. It's like a what's the word? Candidacy? Can't say it fast. It's in a position where if it goes south on me, south as in like down, like bearish. Okay, I shouldn't say south. That implies the opposite. If it's bearish and we do end up getting a drop down, I'm gonna do well either way because I got a plan. And it's solid, in my opinion, and there's a good drop between 8 to 14%. If it goes up, I know exactly where my stop loss is, right? And I'm going to take my stop loss fast, and I got a lot of criteria that's going to convince me I was wrong, and I would be very happy to know I was wrong. And I'd be very happy to know I was right, because I got a backup plan for both ways. That makes sense? And if it does go up, hey, I'm gonna rally like what was it again, 9 to 10%. Great. So, anyways, just wanted to let you guys know my thoughts and how I kind of think when I trade. And I think we're gonna get back to some live trading soon. As soon as I get back to my normal self, and this whole like stuff is over with my friend, the wake, and my family is friends with her family, and lots of mutual friends, put it that way. And we're Laos, right? So it's a very small. That's the country I'm from, Laos. I'm Laotian. She's also Laotian as well. So you can kind of imagine this small, tight knit community of only, I think, 2,000 of us here in the city, 3,000 maybe, and literally everybody knows everybody in the community. So yeah, it's kind of sad. As soon as everything is over, they'll probably get back to it right away. Anyways, I'm going to awake. Have yourselves a great day, and I'll see you guys later. Bye now. Take care.